hanging out, talking more of the markets, taking the glasses off. It's that type of conversation. Stock market is down today. We didn't always know that this was possible. Over the last couple of weeks, the market has absolutely been ripping. My Apple had earnings yesterday. Red down 2%. I got a good screenshot this morning of it being green. I thought this was a little funny, but it definitely did not stick. Apple opening the day green, falling off. Amazon opened the day down 6.8%. Where are we now?
Oof.
Down 7.6. It is one of those days. We haven't had many times where the S&P 500 is down more than 1% this year. There's that stat that's been going around that like it hasn't been down or up more than 1% in a while. We'll see if we break that. Q's has recovered a little bit. Was down more than 2% earlier. So should be an interesting day in a little rest of the market. We want to talk through what's happening here. I don't think the YouTubes went live, or they still are going live or something right now. That is weird. God,
Amazon red on the year now.
Wow.
Amazon red on the year now. There you go. But let's talk through it. We are joined here by George. You guys have heard us talk a lot about Prospero, the awesome app, doing some cool stuff. George has also come on the spaces. George, how are you doing today?
I'm doing great, but I'm a little sick from this whiplash.
Yeah, a lot is going on here. Let me get the Amazon up. What a time to be going on. Year to date. She is ready. Why don't you tell us a little bit about yourself here, as we're going to be kind of talking for the next 30 minutes, hour here. I know we maybe some people know Prospero, but they don't know about you. Tell us a little bit about yourself before we get into the conversation.
Yeah, so I have a background in value investing. I actually worked at Columbia Business School's Value Investing Center when I was 16. Taught myself accounting to work at my first value fund when I was 17. I did different things on primarily the buy side of the stock market. Then I got into AI as a service for financial institutions 15 years ago, and for a while I was just building the back end platform, the data grabbing mechanisms, all that stuff, where I could ultimately start Prospero. And, the goal of Prospero was to create signals that made investing, trading easier for everyone, like a real playing field leveling tool. A lot of that was because even as I was working at smaller institutions, I felt really disadvantaged against the bigger guys, and, wanted to create a more not only a more fair system, but, tools that were easier to learn and apply than a lot of the other ones out there that I saw.
So let's jump right into it. I'm looking at the app right now. We have, when you first go in, there's our picks page. What do we want to look at here? Some of the short-term bull names, long-term bull names, or are we in a bear market now? I don't know. Maybe, probably not. One day is too much. We'll see. But short-term bear, long-term bear. George, you got any thoughts on? I want to dig through a couple of the names on these lists. But you got
on a day like today,
Ooh,
I would actually always start by looking at SPY net option sentiment, or just looking at SPY in the app, but especially net option sentiment. And the time series graph, you can see it was much healthier yesterday and has really plummeted today. And then the same thing for QQQ. On a normal day, I might start with our picks, but on a day like today, you can see.
What does that mean, though? Tell me more. What is the net option sentiment going down? What does that mean?
So net option sentiment is looking at primarily institutional pricing in the aggregated short-term options market. So we're basically looking in a simple way, net, if people are betting more in the options markets on a stock or ETF rising in price or decreasing in price. So when you see SPY net option sentiment at 0, that typically means, and we've seen it a number of times this year, it can get out in front of market turns. That means there's a lot of hedging at the institutional level going on, and they're using SPY. It just means they're concerned. When it stays at that level, it has definitely been a sign that there'll be a deeper market cut. So, one day, if it recovers today, I'd say that's only an indication that you should be hedging today, just like the institutions are, but keep your eye on that number. And then, today I would definitely make sure, or any bear day, I would make sure that you're looking at, the bear picks, short-term bear, especially. Like if you look in, short-term bulls, a lot of the times that's going to be ones that a lot of people are talking about: high social sentiment, high option sentiment. So those are high risk, high reward. So a tough thing on a day like today. But if you happen to see a stock that wouldn't expect there, like an industrial stock, maybe a healthcare stock on that list, I'd say that's on a bear day, those are the kinds of ones that are good to buy there. But yes, generally, I would say for a lot of our users, that short-term bull list is where they start. Maybe the screener, which we update on a daily basis, that's a little more about market timing. I'll probably flip.
Did you
it to
update that today? Yeah. What do you think you're going to change it up to today? Can we get a little
bear
hint?
screener? Yeah.
All right.
I've
So
been in meetings all morning. So
George, can we play through that right now? Can we play through what a potential screener would look like and maybe what some names come out of it? When we're looking on the downside, so my bear side, first of all, there's a downside breakout score, which is more in the longer term. Maybe you're looking for more of what is a low net option sentiment. Maybe you want I don't know. I'm curious. What would you be looking at on the screener right now today?
Yeah.
And then what are some of the names that maybe pop up? And even if it's not the right scanner you end up going with, I'd love to know a little bit more about the process.
Today. And I was thinking I might during these any time that there's a pause, I might just look to make one live here. But yes,
walk us through it. Let's pause it right now. I would look. Can we walk through it live a little bit? I'm curious.
Yeah. So I mean, I can the interface that I make this with isn't very interesting, so I'll just kind of just talk through it. I think it's probably more interesting to look at other things. But or I can share. What do you think?
If you could share it, it's better than nothing. 100%.
Yeah. Okay. Let me get my screen shared. So yeah, this is the interface. None of you see this. But yeah, I'll probably do and then just type a little bit like SPY 20. So can you see this well? I can.
Yeah. That's fine. All right, so I am looking. SPY net option sentiment. I did post it below the X stream as well. That net option sentiment goes down to 0. But I'm even just looking at the net option sentiment scores. When I go into on the search bar, net option sentiment, SPY is first and the lowest, which I feel like doesn't happen often. CCOI, LTM, Robert Half International.
I added that too. And yeah,
how do you pick these screeners?
Short pressure.
Yeah.
So right now I'm just making sure I'm limiting. You can see what I do here. I'm limiting net social sentiment less than 50. So that's a form of risk control, and I'm doing short pressure less than 70 because short squeezes have done pretty well recently. So I don't want to run into the buzzsaw there. So then I'll just do what I'm saying here. Social sentiment less than 50. And then what else did I say? Short pressure.
Shout out Gav. I know he had to drop off, but we appreciate him hanging out with us at the start.
Thank you. Yeah. And then we're going to do, we'll do downside minus.
So the downside breakout is more of a longer term score. When you're making these screeners, how do you kind of mix the short term versus the longer term?
So what I will typically do, I always like to have at least a look into downside or upside. And that is that's really a risk control measurement because, I actually want to do this instead. I don't care as much about short pressure. Because basically the way that I look at it is if the long-term picture isn't good, and the short-term picture isn't good, that's better than just the short-term picture not looking good. And basically what's in downside, we mentioned net option sentiment. Downside is actually the long-term options markets isolating more for put demand below where the stock is trading. And then we layer in things like analyst ratings, price targets being below where the stock is trading, and price momentum factors. So more longer term price momentum factors. So there's a lot going on in that metric that can really help with risk control. Obviously, a lot of the stuff we're looking at here, social sentiment, option sentiment, technical flow.
Is this something you think you'd add into the app at all?
Sorry?
Is this something you would add into the app at all that we can do ourselves?
Yeah. Eventually. But it's actually really hard in a lot of compute. So when we're larger, we can do it. But now that we're like smaller, that would like a bunch of people running these queries would raise our compute budget a lot. And we don't really want to charge. So
that makes sense.
That's unfortunately why we can't do it yet. But that's something that like I think.
Can I ask that also? I want a separate question on this one. I would love to see what this looks like if we changed out net social sentiment for a different one.
Oh.
Don't have to, but I'm just curious. Like, what's another one that if we're talking short-term downside, what is another one that you would maybe kind of consider that we didn't include here if we were changing it to social sentiment? Maybe net option sentiment? Or you already have that in there?
We have I like the option sentiment value. What we could do.
What about technical flow?
Technical flow is there. It's the actual value. Okay. So we're low technical flow. But what might look interesting is we might do technical flow less than 50 and social sentiment here. But that ends up looking a lot like one of the things that I try to avoid is that ends up looking a lot like we see a lot of the same names. It ends up looking a lot like the short-term bear that also has option sentiment and social sentiment as the priority. That's why I always kind of try to separate them. Like we could do something like.
What about a high growth? What if we played something like that? Maybe is a little counterintuitive. Like, hey, this is a high growth. We don't actually have to do this. This is when the high growth stocks are going to be pulling back. What if we're trying to filter?
That might be interesting. We could do growth greater than 60 and then social sentiment less than 50. And then this could be interesting just to look at it. Now these are stocks that could really get. This is probably an interesting list. I like this. And we can say.
Ooh, we got a question in the chat too. Shout out Juniper. It's been a regular in these live streams. We'll talk about it after. But we got a name to look into the list after.
Oh, a name to look up here?
Yeah, after. Yeah. UNH is what we want to talk about at some point.
Oh, yeah, definitely. That's an interesting one. All right, so we're going to do that. Oh, why is not letting me save? Oh, there we go. And then we'll.
Is bear momentum, you think, still a good name for it?
Oh, yeah. I think we can just do like. I mean, this is kind of yeah.
Yeah. My thought is is growth pulling back? But but momentum is also kind of a similar thing.
Yeah, and then I can maybe change the growth description a little bit here. There we go. And then what I always do is I just make sure I can see it in the app before I send out the alert, so nobody gets it.
I gotta say something. I was gonna make a comment. I would love to make a screener where we can. I see bear momentum screener, nice. I wanted to make a screener where Apple looks nice. That could be a fun time. But Apple actually does not look bad on Prospero. Maybe it's not when you're going to like, oh, this is the best thing ever, but it looks solid.
Here, we could probably like, I think why I like doing that exercise that you're talking about is like, you're just like, okay, can anyone kind of like beat Apple at the game that it's playing right now? Right. So I bet we could find it like this. I bet we could do, and it doesn't matter because we're not going to save it. I bet we could do,
It has a solid upside score.
profitability greater than 65. And let's do social.
No, do net options or upside. I feel like those are better scores.
Well, no, I'm putting them down here because that'll help its ranking.
Gotcha.
Like plus upside. And then we'll
Oh,
This
so
is-
you're filtering out ones that are below. I gotcha. And
Yeah.
You're filtering
we'll
out
do
and
plus
ranking by
options
this.
minus short pressure because it's got very low short pressure, and I believe we'll find it this way.
Number one, here we go. All right, Google.
Oh,
So
see,
even when you
it's on
try,
the
but when you try and make it for Apple, there are still ones that are better.
No, but
Google-
yeah, that is funny. But it's nice to see, like, okay, like, is
Scroll
anyone
down
beating,
a little though.
is anyone beating it at this game? Right? Oh yeah, net option sentiment just went down on it.
Scroll down a
that's
tiny bit. We
really-
got the UNH was asked about, and I spotted UNH on this list as well.
Yeah. Oh yeah, there it is. Low, surprisingly low short pressure, but that's interesting. That really tells you that the market thinks that it's like we can look. So net option sentiment is low. That's a scary number. I don't know. I can't really see. Is it say 45 here? Yeah. Yeah, I guess it would be a lot higher if that wasn't the case. But big difference from the top to the bottom here. UNH is scary at a 45 net option sentiment. But I will say this: if you're not worried about the headlines, there's some like headline risk priced into it. If you are not worried about the headlines, I personally am. But if you're not, I would say UNH is looking like a great buy. 85 profitability, 74 upside. But yeah, that lower net option sentiment with the headline risk, I wouldn't even touch UNH with a net option sentiment that wasn't above 90. But like I said, a lot of these numbers reflect the market pricing in headline risk. So if you think that's over, there's not going to be any bad headlines, it's a great buy. All right. Any other filters you want to check out before we're done?
Yeah, I would love to. Eli Lilly is another one that I'm watching, and it's on.
Yeah,
this
I was
one.
looking at adding that today.
Profitability at 90 and net options. Jesus Christ. So those are two ones that Eli Lilly is doing really well on, one in each area. How do you rank? Like, okay, there's 5 indicators on this long-term part. There's 5 indicators on the short-term part. Everything works together, whatever. But profitability being a super high and a net options being super high. How does this Eli Lilly kind of? How do you feel looking at this? What I'm looking at on Prospero.
I would consider I think I look at healthcare very similarly, like with the headlines with Trump.
Yeah.
It's just so hard to have faith in anything in healthcare right now because there's just tremendous headline risk. But let's see. So, but I mean, I would this is something that if the market continued to have trouble, I would be more inclined to turn to an Eli Lilly because there's value there. And we've definitely seen on things like tariff concerns that, that value is, more important. So I bet this is a little Eli Lilly screener that we're finding, but let's also see if anyone can beat Eli Lilly at its own game. Oh yeah. Meta. Oh, but there's only 4 stocks of these parameters even. So if we could see, let's lower it to 80 and 80 and see if anyone can then beat Eli Lilly at its own game. Yeah.
Baba.
Alibaba.
Meta's a dog though.
What?
Meta is an animal.
Yeah, no, I mean, it had another you've seen Meta in our system for a long time. There's just there's few things, and like you can look in. We build a screener every week, and Meta is just like fixed at the top of it every week. But yeah, a lot of the times it's not even close. Like when we run this, and like we'll run it, and there's I guess Google this week, Google and Cat were above it. It's frequently number one. I mean, Google's been very strong recently, and you can see it's strong because it has a lot of these, value. I mean, I guess Meta's there too. I guess, yeah, Google's just looking better in a few things. Option sentiment, technical flow. Yeah, Meta was lagging in. I bet if you go the week before, yeah, Meta had a bit of a slump in option sentiment that weekend, but by the time it was at earnings, it was high again. But
and I bet you after earnings, it's still looks good.
Yeah, no, obviously, like you can just see it up there. But yeah, I think even the week before, yeah, this is the kind of behavior you see sometimes. Like Meta is 1, and then the next highest one is almost 30 points lower in the screener. That's like a typical week. You'll see Meta there.
Yeah, Eli Lilly looks pretty decent on here. AutoZone making an entrance. I've been seeing that on my 52-week high list a good little bit. We got a question about Oscar Health. I took a quick peek at it. Doesn't look super great. But a lot of the short-term signals on Oscar Health, 89 dark pool score, 71 short pressure, 52 net social sentiment. So definitely not low, but nothing crazy. On the short term, this looks like something that I would be scared to short, and could be a short squeeze thing to go in higher. And then you look at the longer term ones. What do we see here with a 72 downside and a 65 upside score?
I mean, that's the first time I've seen the downside higher, so that's frightening, and I think that's probably due to the healthcare news this week. I will say like why I feel like Oscar is like a lot of hype, a lot of betting on growth. You see this like 33 profitability and 10 growth, right? Even if it's very high in even if it's very high in the rest of the things, which it typically is, like upside has been higher. This is the first time I've ever seen downside higher than upside. But even if option sentiment and social sentiment was a lot higher here, I would still hesitate to add a stock like Oscar, even if it was like 80 option sentiment, 80 social sentiment, just because, like I'm talking about, the way that I de-risk is I try to have something that's good in long-term and short-term signals, because there's always a lot of options like that. So that's my hesitation with Oscar. It does have a lot of momentum. I think it has a great future, and you can see that normally in the upside being higher than the downside. But I think there's that headline risk for it right now. And I think that it's just like, because of that profitability and growth situation, if this, cascades into more red days, I think a stock like Oscar can get hit harder than a lot of other stocks that have a better, base of value.
Are there any of those FinTwit names that you've seen recently that you're I've been interested in or been a fan of? Oscar Health was definitely one of them. We've had the Palantirs and the Robinhoods. Those have gotten pretty big, but they've transitioned to some interesting ones. I bought a tiny bit of Zeta. Definitely did not buy Open Door. I'm in RKT. RKT is kind of like a little bit of a middle ground there, where it seems like the institutional players seem to enjoy that one. They had a good earnings yesterday.
That's the one that I would have highlighted. Like we recently had it in our portfolio, and we de-risked it out, regrettably. But that's what I look for. And if you look at RKT, it's got that same meme stock short squeeze potential. I've seen a lot of social sentiment for it. Oh, it's a little lower now, ironically, maybe because it has been recently, but it's got that, compare it to Oscar. This has got 69 upside, 43 downside, 82 net option sentiment, but also 42 profitability and growth. And that's what I'm talking about with the complete picture. You look at a stock like this, you could still play the retail momentum, but the surrounding fundamentals are a lot more solid.
We got Parity wants us to look at Amazon. That one. This one's I'm looking at the scores right now. It has a 38 downside score, 53 upside score. It has a 65 profitability, 57 growth. The short-term signals are fine. Truthfully, this just looks like something that this is a lot of the times it doesn't feel good. It doesn't feel bad is what I'm saying. This feels like a stock in the middle. I don't
It's
know what's
very
taking this.
okay. And I
Yeah.
think where it really stands up is you look at this is definitely gonna be the worst stock in the Mag 7. And Prospero is very helpful to look at comps, right? And I think when you're looking at comps, when you're looking at the other Mag 7 stocks, you're not getting a good deal on this relative to the other ones and what the signals are showing.
A lot of people I know would be crazy to hear that. Listen, Apple looks better than Amazon right now on here. I'm not saying Apple looks like the best one, but it's not the worst one.
Yeah, and you know what I think? I think that's what Prospero actually makes very easy for people, right? Because I used to struggle with this. I can think of Amazon as a company and be like, Amazon's fantastic. As a business, I would rather own no other business over the course of 10 years than Amazon, because they're a great process company. They're great at expanding, building new products, acquiring well. They do everything. A lot of the big companies only do some of those things well, especially making new products. A lot of the Mag 7 do not actually do well in that. And some Meta can cover it up with acquisitions. Traditionally, they don't make good new products, but they're getting better. Google's been terrible for a long time. But anyway, you go and you look at Amazon, and it's just not priced well. You look at its profitability and growth. It's good, not great, right? Even Apple, that gets a lot of criticism for that. The sum of their profitability and growth, I think, is higher than Amazon. So you look at all that, and it's the rest of the numbers make sense. You're getting a lot more bang for your buck on especially profitability plus growth when you look at Meta. So that's why you see the options fundamentals looking a lot better on that, because there's better value in that. And irrespective, if you ask me, what company, I think this is becoming more true for Meta, but I think it's a tough answer. Edge goes to Edge goes to Amazon if it's which company do I think will grow more in the next 10 years, right? I think there's more risk with Meta. Amazon's more solid. But if you're asking me what's better to own at the price it's trading relative to that risk, the easy answer is Meta. And I think that's the kind of thing that when you look at these comparative numbers, it makes things a lot easier, because you can just see not only are the fundamentals, when graded against other companies, better for Meta, the institutional bullishness based on that matches, and it creates a much better picture for Meta.
I'm curious. I'm looking through some more of the stuff on here. I appreciate the thoughts there. I'm looking at the long-term bear picks. JetBlue and Rivian are two that are popular names. Rivian a little bit more for a while. JetBlue, I've seen I'm sure there's one or two people in this chat who are betting on JetBlue right now. This has become a name that people have been betting on a turnaround a little bit here, down pretty aggressively. These are both on the long-term bear picks. You got any thoughts if we're looking at these scores that stands out to you, and then just these names that maybe you avoid because they're a little bit more known? A Rivian is on this long-term bear pick, but it has a net social score of 94, which is kind of crazy.
Yeah.
Actually.
I mean, those two, the long-term bulls and so there's going to be a big disparity. But, JetBlue's down almost, 28% over the last year. And, their last 4 quarters EPS, -16, -21, -59, -21, right? The quarter before that, they were actually profitable. So the story on JetBlue is not great, right? They're a consistent loser. They had that one really bad quarter. So yeah, you look at that, the stock is down, right? The EPS is down. That's why, you have the bad, profitability and growth fundamentals there, right? And then you actually have, like I mentioned, in downside, which is, the long-term bears are basically upside minus downside plus profitability, or sorry, downside minus profitability minus upside. So those are the ones that go in there. Profitability, growth doesn't really play in. But yeah, when you look at that, you can see it's got all the components. It's in a bad EPS trend on the profitability side, and the price is down, so that's going to be bad momentum for its downside grade as well as its upside grade. And then you also you also would say, like, why would institutions be, betting on this? I actually think, especially in the options markets, I hear a lot more retail betting on recovery play with option than institutional. I think institutional is much more inclined to just buy shares versus, call options if they're doing a recovery play, because they know it could take a while, and you're just eating, you're losing dollars on theta that way, as opposed to if you're playing a recovery play and you're just buying shares as it go down, you think it's eventually, like, that's the better way to play it. That's what institutions do. So of course the options fundamentals aren't going to look that good on it.
All right, we got a question from the chat from Jonathan. Can you guys talk about any healthcare and or fintech popular companies? I want to go with the fintech angle. SoFi and Robinhood would be two that I'm interested in. I have SoFi pulled up on the screen right now. Was looking really great after earnings. I could zoom in if I wanted to, but basically great earnings, dumping on us with a filing and kind of recovering it a little bit. Actually, great earnings, dumping us on the filing. Then they bought it back, and here we are today. High dark pool score, 82. Short pressure score is decent. What's standing out to me on SoFi is strong upside and growth scores in the long term. And then obviously the net social and technical setup looking pretty good there. What's the initial thoughts on SoFi here? Even if I zoom out from this, we're touching these all-time highs. So I see why, like, the technical wants to give you that. Like, if you can break above this, it's like Fibonacci's, and you're looking for extensions as opposed to hitting new levels. That'd be quite a big thing. Although that could be a level that it struggles to get through. I could see it both ways. What are you looking at on SoFi here?
I like SoFi. I mean, it looks good in our metrics, but the way I look at SoFi and Robinhood is I think both of them are poised to do very well. After the big
SoFi,
beautiful bill.
Robinhood is lighting up this short-term score. I'm sorry to interrupt you. I looked in 89 net options, 93 net social, 95 technical, 78 dark pool, 50 short pressure. I mean, like that Robinhood short-term one.
Yeah, that's pretty nuts. So I mean, I think that actually displays well what I'm talking about. I think if you're betting on a retail resurgence, and there's a lot of things I think in the big beautiful bill that will attract retail and just put more money into the stock market, which of course attracts retail. But I think if you want to bet on that, Robinhood's the bigger risk, bigger reward. And I think SoFi is a way to capture that gain. It'll do very well, I think, but you won't have the same upside. And I think what it comes down to there, and it's reflective in there. Robinhood, looks better in the signals. And I think overall, I think it's a better bet. But I think because you have a lot of that excitement and that future playing into how the stock is priced, you see it like today. I think like a growth stock like it, if people are worried, it's, one of the first things that they dump. But I think,
I don't know if you saw, it recovered pretty well. It got all the way down to like 93, up $10. It held in.
Yeah, it's crazy. But yeah, I think when you look at Robinhood, I think the only thing that should concern you is two things. A, do they have another bad headline in them? I mean, they recovered from the other ones, but they're going to take a hit. I think that's always, that's the concern. I actually think that's why they're not in the S&P 500 yet. You look at AppLovin and you look at Robinhood, both of them have had some negative stories. And I think that that's the big reason we haven't seen that yet. So I think you have that risk, and that kind of cascades into the risk of, like, people are pricing into Robinhood, it being the hot retail app. That's not priced into SoFi. SoFi, it's priced into being like, okay, it's a retail app that has solid fundamentals, that has a certain marketing strategy, it'll work. But that's a little more stable because they don't have to be the leader. Like, the only risk to Robinhood, in my view, is if someone makes a better, easier to use app, right? And I don't think that there's a high probability of that. But that's the only thing that's kind of priced into the Robinhood risk. Personally, I think Robinhood's going to do very well over the next 5 years. I don't think it, like I said, I don't think it has as much stability, downside protection I'd rather own Meta than Robinhood for that reason. But I think it absolutely has a greater potential to 2x, 3x than Meta does.
All right. I do see David's question. I'll come back to it because this might be on topic here. Jonathan says, I think SoFi's lack of crypto exposure puts Robinhood over the edge in that comparison.
Yeah. Yeah. I mean, I like Robinhood better. But SoFi is the safer choice that will also grow if you're looking for, a growth name in financial services.
As we talk about rate cuts too, that's a name. They're more on the lending side. I'm sure that would be looked at well. We got David asking about Oscar and then dark pool. I want to ask more this question about what the dark pool rating actually means and like what is dark pool in general, and then what does a score mean?
So we'll do kind of the whole history of dark pool because I always like to tell this part because some people don't know. Dark pools were actually added because institutions used to do a lot of what are called like off-book transactions. They would like privately transact with each other on these block trades. And so dark pools were added. So there was transparency. So we could actually like see these things weren't off book. So you could see. So basically it's a private market.
Approximately 40% of US trading volume is in dark pools?
Yeah, it's huge. It's a private market where large blocks of stock trade at fixed prices, right? And what's nice for institutions about that, right, is if you want to trade 2 million shares at exactly $40, like you can do that. If you do that on a normal exchange, right, you'll move the price, you'll get bad execution. So, there is a practical reason to prefer the dark pools because in certain ways it does also stabilize the markets because there's a 24-hour delay of reporting too. But, the downsides are, it's not transparent, right? We can't see it in real time. These institutions can see it in real time. And the other thing that I don't like about it, and it should be, is I think they should be open, right? I think anyone should be able to, participate in these transactions, whether or not they have licenses. That's actually my major problem with it. Anyway, obviously these prices can be, these transactions, especially if they happen above or below market, can be huge indicators of what's to come. What's tough about dark pools, right, is there's a buyer and a seller. So if there's a below market transaction, it means one person, one institution thinks the market's going to go down, like a lot if they try to dump their shares, and the other one thinks that they're getting a good price, right? So inherently, the dark pool is non-directional. Now let's talk about what it actually is, right? What it actually is, and we've looked at this in stocks that go up in dark pool, it tends to be more of a bullish indicator than a bearish one. Why that is hard to explain. I mean, the easiest thing to I'd say is that statistically the market goes up a lot more than it goes down. So a dark pool transaction could just be going along with those statistics, right? But one of the things we do in our dark pool rating that we think is helpful, like if you go and you look at a percent traded in the dark pool, that could be very misleading, right? Because it's very easy for a small cap stock to be traded 80% on the dark pool. Whereas like for a large cap stock, you don't really see it that often, even above 60%, right? So just if you're looking at pure percent traded on the dark pool, basically what you're going to get at the top is a lot of small cap stocks and not a relative value. So to normalize it, we actually will do things like, volume versus, recent volume of the dark pool to get a little bit like, okay, is it different today than the other days? And then we'll also do things like churn. So like what's traded as a percentage of the total flow of the stock. So yeah, we always like to say we simplify and make things a little more information rich. So that's all to say an 89 dark pool rating could theoretically be good or bad. It could mean that a lot of people are convinced that the stock is going to go down and they're trying to, dump their shares even above market just to get out quickly, right? But more often than not, it actually means a bull sign. And if you see dark pool going up, it's probably bullish, but it definitely means risk. So lean bullish but also risk. Oh, and like one other thing, I've actually talked about this with Evan before. It's good to look at short pressure and dark pool together, right? Because you got a high dark pool and a low short pressure. That's much more likely to be a bull signal than if you have a high dark pool and a high short pressure, unless it's a short squeeze, right? High dark pool and high dark and short pressure could actually means it's a short squeeze candidate. So you also have to be careful there.
I appreciate the thoughts there, and so does David. If you guys have more questions, we got a couple more minutes left here, so now would be the time to drop them in there. Can you do me a favor and look at one name that I've been watching long term? It is splitting itself into 3 parts, second half of next year, so a little bit of an early play, but we'll see going into it. I'm hoping we can get some GE love here. Can you look at Honeywell for me? HON. I'm looking at it on here, has a solid market similarity score. Profitability is a 74. The long-term one looks decent. Nothing that, I'm biased, so maybe I'm like, yeah, this looks good. But at the end of the day, probably just like solidly, slightly above average. The short term, there's not really much there. But I don't know if it's something you would necessarily expect. 57 net options, 53 technical, not bad. What is your thoughts on Honeywell looking at it? Nice pickup in net option sentiment. That's cool.
Yeah, that's definitely a positive trend. I think people going to safer things, although it is down from the open. That 74 profitability probably worked well. I actually want to talk about market similarity for a second, because I would actually interpret a high market similarity a little different. I mean, 80 isn't necessarily like this, but the reason some people might be familiar with the term beta, but a lot of the stuff we've tested for ease of understanding. So instead of beta, which could be positive or negative, we actually just market similarity is how close, whether it be positive or negative, it is to the market, right? So something that's a 1.1 beta would be the same as a 0.9, basically, 10% different than the market. And we scale that obviously. But this is actually how I look. I actually look at market similarity as a risk reward number, right? And something with like 100 market similarity, I actually am pretty uninterested in owning because a stock with one. Because basically what you're saying at that point is this stock tends to move with the market. So you're basically buying the market with single stock risk. So you're basically saying that instead of buying the market where I'm diversified, I'm essentially getting the same return as the market while I'm exposed to earnings risk, while I'm exposed to headline risk. So the closer to 100 you are, the more I'm just like, I might not really be interested in the stock unless it's actually high in all of the signals. And then low market similarity, I would actually view as potentially good if I really, really like the signals, but a bigger warning sign if I don't. As for the rest of Honeywell, this is a stock that you could easily own long-term, right? You could also look at an 80 SPY and option sentiment, say, you know what, if I think the market is healthy, this is a good stock to own because it has a little more upside than the market, but it doesn't necessarily have, as much downside risk as individual stocks generally. But that profitability is good. Upside higher than downside is good. Like when I look at a stock like this, I say this. If you like this stock, I would say this is confirmation that it is a safe stock to own. And there's nothing in here that would tell me that you shouldn't own it. But when I go down to look at 55 net option sentiment, 27 net social sentiment, that's where I start to say, this is a perfectly good stock to own long-term. But maybe if I have new dollars today, I'd want to put them again in something that looks good short and long-term.
I appreciate you, George. And as I was looking, I see Jonathan. Not only did he comment in the spaces, but below where my live link on Twitter, he tagged you in the post as well. So he took that little extra effort in. So we got 2 questions here, Jonathan and David. We'll go with Jonathan's first. We talked a little bit about Eli Lilly, but he might not have been here for it. Could I hear your thoughts on Eli Lilly and also the big pharma companies as a whole in today's climate? I know we were talking a little bit more risk. Obviously, there is some letters that were sent out yesterday, which we might end up seeing come to fruition. But what's your thought in this space? And I feel like Eli Lilly is also they're riding hot on this in this weight loss theme, which Novo Nordisk got a little bit of a plug pulled in it, but it seems to be a little bit different than some of the other pharma names. Obviously, I mean, I'm just an outside looking in, and I just told you that there's different type of pharma names, which is kind of a dumb statement. But what's your thoughts, Eli Lilly, this whole sector in general?
It definitely looks more solid in the signals, right? It definitely has that going for it than a lot of the other healthcare names. But overall, I don't like the risk reward on the healthcare with these headlines, right? Especially if you have kind of what I would refer to as cascading headlines here, right? We have a potential like these tariffs. The market recovered well, but it definitely these tariffs spooked the market more than I've seen them spooked by tariffs in a long time. So you have to weigh that in, right? You have to weigh in that drag on the market. And there's actually an argument that if there's no headlines, people could see Eli Lilly as a value if there's no further, healthcare headlines. But if you have these tariff concerns and the healthcare concerns expand, you could be seeing some really red days for those stocks. So for me, I'd prefer other stocks right now.
All right. Appreciate you, Jonathan. And then David, we got the final question from you. I said that weird. How does Prospero app, and this is an important one, how does it get all the information? How does it get all the data? Can it be trusted?
So we have an options data feed. We have a market data feed, price targets, analyst ratings, technical factors, everything that you'd expect. Then we have a big operation that's lasted for many years. I mentioned I had a background in AI and this. So for many years, we've just gotten web data from a lot of places that we use in different ways and helps us kind of understand what's going on in the world. How much can it be trusted? I mean, well, first we have our newsletter picks where we demonstrate how to use it and how to build portfolios. And those results speak for itself. It's, 67% above the market about on average the last 4 years. But, other than that, see for yourself. One thing that I promise anyone is that if you use Prospero for a year, just integrate it in your process. You could do it when you're adding, when you're, researching, when you're thinking about, buying more of a stock, getting into a stock, exiting it. If you just check the signals, then I've not had one person come back to me and said they haven't gotten better. I promise you'll get better. And I think that's the most important thing. We like to think of ourselves as an educational platform, not just an app or a newsletter or anything like that. And I think the best way I can educate anyone from a high level is that there's no magic bullets in investing, trading. You have to build your skills. You have to build your sources. You have to build a process that you can repeat. And it might take some elements from my process or other processes or whatever. But if you're not building that, if you're just taking a recommendation for an app here or there, you're actually not building the right frameworks in your brain to get better. But if you work to build those frameworks and use Prospero, it's the best tool out there to make you better.
I appreciate you for coming on, George. We had 6,400 people come in, hang out, listen for a good bit. We got some good comments. Shout out David and Jonathan and Parody and Juniper, all hanging out with us in the chat. Is there anything you that was a good wrap up there. We're talking Prospero here. George is on the spaces a bunch. You guys are hearing this all over the place. I thought this was a good rundown. The link also, if you guys are watching this on X, you just go into my pinned post. It's right below that. There's a couple tweets there. Go check that out. But anything you want to leave the people with, George? I appreciate you doing this with me, and we should do it again.
Yeah, absolutely. And yeah, I mean, when I always like to say, if you're new to me, Prospero, anything, you could always shoot me an email, george@prospero.ai. I love to help people learn the platform. I'll give you some free trials to our stuff. Feel free to reach out. Thanks, David. Good to hear.
Shout out, David. We appreciate you. We appreciate everyone. Thank you for hanging out with us today. Hopefully, you're not doing too bad in this market. We shall see. It is only one day. If you guys are watching this on YouTube, make sure you're subscribed. If you're watching this on Twitter, go check out George. Go check out Prospero. You can see the kind of on his name. If I take this off, a little bit more there, some of the spelling, but I appreciate each and every single one of you. We will catch